Good morning, good morning, good morning. It is Tuesday, the 8th of July, all day. You join me and Mr. Michael Brown for the morning blast, where, as usual, we will be giving you a review of what's happened yesterday, a preview of today, maybe add a bit of value, maybe put a smile on the face. Plenty of swearing, unfortunately, because Michael Brown has a potty mouth. But before we go any further, I'll get the legals out the way. So as usual, nothing discussed in this space session constitute trading or investment advice or infers any kind of endorsement by PIQ, myself, Ryan Paisley, or Mr. Michael Brown. Hello, Mr. Michael Brown.
Oh, very good morning to you, Ryan. Good morning, everyone. Sadly, I can't argue with any of those assertions you've just made.
Potty mouth.
Fuck off.
What's been occurring, my dear friend?
Oh, well, I suppose we best start with the issue of trade because after, I think
Oh, yeah.
3 days of promising to send out letters around tariffs, President Trump finally actually sent those letters out yesterday. Now, I'm not even going to pretend to have tried to work out the rhyme or reason or logic behind the levies that were outlined in these letters because, frankly, at first glance, there doesn't really seem to be any logic to the tariff rates.
Did I see someone's actually, was it South Korea perhaps, or someone's actually got worse tariffs now than they did on Independence Day or
Well, I was
Liberation Day,
actually,
sorry.
yeah, I was actually just going to go on to that because Trump sent out. He said he was going to send between 10 and 12 letters. He actually ended up sending 14. So, clearly maths is not his strong point. 8 of those tariff rates are lower than they were on Liberation Day. 4 are unchanged, and 2 are actually higher. I'm not entirely sure. The 2 that are higher, by the way, are Japan and Malaysia, where the tariff is now 25%, and it was 24%. So not a huge difference, but nonetheless, it is a little bit perplexing, how these
Yeah,
tariff rates have been calculated. To be completely honest, I don't think that really matters. I think the important thing is that, as we flagged on the call yesterday, all of these tariffs won't come into effect until the 1st of August. So the
yes.
9th of July, tomorrow, which was a deadline, is now no longer a deadline. That can has been punted 3.5 weeks down the road. And again, it feels like I'm repeating myself, but they've given themselves plenty of wriggle room in terms of not only when these tariffs come in, but also the levels that those tariffs will be set
Yes.
at. If you actually read the letters, well, you only need to read one because it's a template. It's basically saying, we reserve the right to move these up or down over time as the trading relationship between the two countries
Yeah.
changes. So
And
I think that's
we've already had the Japanese on the wires this morning saying, we've got time to talk more and et cetera, et cetera.
Exactly. And I think this is why the market reaction to all this has been relatively muted. The S&P and the Nasdaq closed down by about 0.8% yesterday. They were down just over 1% intraday. But I think the market has got to the point where this is all just noise. And frankly, participants, for the time being at least, are relatively happy to
Yeah.
effectively call Trump's bluff on this and go, we have seen numerous times over the last 6 months or so that the way Trump does business is to escalate things, bring other
Yeah.
parties to the table through
Yep.
that
Yep. Yep.
escalation, seek some concessions from them, and then get the deal and celebrate a win, etc., etc.,
Yeah.
etc. So I think the decision that investors have made this morning, and it feels like a wise one, is basically this is all one big negotiating gambit.
Yeah.
This is not the panic-stricken trading that we saw at the start of April. This is more a case of we kind of know the game now, and Trump's going to play the game, and markets are happy to
Well,
play the game with him.
and
Is very much the vibe I get this morning.
it ties in with what we've said previously, which is, not just in this kind of situation, but you see it all the time. If there's an event that's been dragging on for a long time, it takes bigger and bigger kind of upsets to move the markets equal space, equal distances. And I think, the market's just kind of going, hang on a second, does this deserve like a 5% move? No, it definitely doesn't. That it's just going to be a kind of give us time to work out what's going on, allow markets to kind of just recalibrate a little bit, but no one's in any rush because, quite frankly, as well, we don't know what's going to happen today.
No.
Do you know what I mean? It's just quickly, because we were talking about Japan's replies already, so I've just quickly called it up. So already we've had this morning Japan's tariff negotiator Akazawa saying the automobile sector is core of Japan's economy, cannot tolerate 25% tariffs on automobile. Auto parts are inflicting huge losses on Japanese firms. Asked whether he could put something new on negotiation table. He said, my feeling is what we have already put on is necessary, issues on the table. No point striking a deal with the US without agreement on automobile tariffs. So it seems like that's their red line. So it'd be interesting to see how this moves. I know you said yesterday that Toyota were actually thinking about
Yeah,
basically
that's ridiculous.
making all the parts in Japan, shipping it to the US, assembling it in the US, and then even sending the cars back to Japan to sell them. So yeah, it feels like everything's on the table. It's just they just do need to crack this 25% nut on the tariffs for autos.
Yeah, very much so. And I think, to be honest, the smart money would be on them doing so in some way,
Yes.
shape, or form.
Yeah.
Yeah,
I wouldn't like to guess what that form is, but it definitely feels like something's going to be done.
Yeah, absolutely. And the other thing is, of course, just lastly on this one, we said the deadline is now the 1st of August, 3.5 weeks' time. We've already had a couple of weeks ago, the Treasury Secretary, Scott Bessent, saying, I reckon we can get trade wrapped up by Labour Day. Well, Labour Day is not the 1st of August, it's the 1st of September. So I certainly wouldn't rule out things slipping once more,
No.
particularly when we had Trump 2 weeks ago going, I don't think we're going to extend the deadline. Guess what he's done 2 weeks later? Extend the deadline. So it's pretty clear how all this plays out, I think, in my mind. The one country that didn't get a letter, well, there were many, but probably the most notable country that didn't get a letter yesterday was the European Union.
Whoa,
I
whoa, 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 whoa. They're not a
What?
country. They're a block.
All right. Well,
Come
yeah,
on.
fair enough.
Come on.
Well, the one trading bloc that didn't get a letter then was the European Union. You're going all bloody Nigel Farage on me now. And I do wonder whether this is perhaps emblematic of the fact that a deal or a framework or agreement in principle between the US and the EU could be close. In fact, Bloomberg citing sources overnight noting that the EU is indeed seeking to conclude a preliminary trade deal with the US. They are seeking to lock in that baseline at 10% tariff beyond what is now a 1st of August deadline. But the EU is also seeking an exemption from that 10% rate for certain key products, including aircraft, wine and spirits. Now, I think the first part of that will be a lot easier to negotiate than the second part of that, given that the 10% baseline seems to apply to absolutely everyone. The UK is a good example. Our trade with the US balances almost perfectly. We are also, supposedly part of this special relationship with the United States, yet we are still subject to a baseline 10% tariff. So I think the EU will have some difficulty in removing that entirely, but it does seem as if the direction of travel is certainly towards an agreement of some description being made there. Away from all of the trade nonsense, a few other bits and bobs from yesterday. It was a relatively subdued day of news flow, to be honest, and actually market activity, because everyone was basically sat there waiting to see what Trump was going to say in those letters. So we spent most of the day sort of twiddling our thumbs, frankly. Nevertheless, in terms of those headlines, out of China, the PBOC, apparently the central bank there, have been asking around various financial institutions, brokers and banks about the recent dollar weakness. This is according to Reuters, citing sources. They didn't actually state why they've been asking these questions, but I don't think it takes a rocket scientist to work out that the PBOC might be getting just slightly jittery about the appreciation that we've seen in
Yeah.
the CNY or the CNH. If they weren't, then they probably wouldn't be asking these questions, to be completely honest with you. So I think that's certainly one to keep an eye on, particularly given that Trump and Bessent are both seemingly wanting a weaker dollar and also China to absorb some of that currency strength. We're not even trading below 7 yet. So if they're getting nervous already, then that is not a particularly promising sign in terms of those potential negotiations. As for other headlines from yesterday, Reuters again citing sources, noting that OPEC Plus are set to deliver another output hike of around 550,000 barrels per day in August, which would come into effect in September. Of course, that would mirror the size of the jumbo output hike that they delivered over the weekend, and it would also result in all of the voluntary output cuts then being unwound at that point, which is something that we know Saudi are seeking to do in very, very short order. We did see crude actually gaining some ground yesterday, despite all of those stories. Overnight, we have had a policy decision out of Australia, the Reserve Bank of Australia delivering a hawkish surprise, much to the
Yeah,
consternation
very
of
much.
many people in the Pepperstone Melbourne office this morning. The RBA holding rate steady at 3.85%. Money markets had actually priced about a 90% chance that the RBA would deliver a 25 basis point rate cut. And for those unfamiliar, certainly the sort of rule of thumb with the Fed or the ECB or even the BOE is if you get over about 80% in terms of market pricing, it's basically nailed on that the central bank is going to do what the market is pricing. Clearly, that does not apply for the RBA. Nevertheless, it's very much a case of cuts delayed as opposed to cuts scrapped entirely. The guidance around that policy decision noting that inflation risks are more balanced and that the board would rather wait for, and I quote, a little more information on inflation before lowering rates further. For those unfamiliar, the way that CPI works in Australia is quite frankly mental. You have a monthly. You have a monthly inflation number, but the basket of goods changes as the month goes on. So as the quarter goes on, sorry. So at the start of the quarter, the basket is much more heavily weighted towards goods. Towards the end of the quarter, the basket is much more
I
heavily
mean,
weighted towards services. And
truly,
then you get
truly mad.
and then you get a quarterly print. So 4 prints a year, which are, the basket doesn't change for those quarterly numbers. So the RBA have basically turned around and gone, we don't really trust the data that we're getting. We want to wait for the Q2 print, which will come out before their next policy decision. Nevertheless, it was a split decision among RBA policymakers, 3 of the 9-member committee actually dissenting in favour of a 25 basis point cut at today's meeting. Predictably, the Aussie dollar trading firmer on the back of that hawkish decision. And last but by no means least, news via Bloomberg overnight, Meta has apparently poached the top AI models executive at Apple. This is as part of Meta's ongoing hiring spree in the AI sector, which you obviously touched on, Ryan, last week, so footballers' salaries being thrown around there.
Yeah.
To be honest, and I don't need to say this, but I'm clearly no expert on AI whatsoever. This strikes me as a little bit odd because all we ever seem to hear about in this sort of realm is how Apple are struggling and they're lagging miles behind the competition. And, last week we had reports that they may be looking to use someone external to provide all of their AI services as opposed to doing it in-house. And now Meta have gone and hired the bloke who was running something that apparently wasn't going very well. So maybe there's something I don't know there. Maybe they've seen something in the chat, but whatever it
Yeah.
seems at first glance, a little bit of a peculiar one.
Do we know what salary he was on? Because obviously we know that we heard stories about 300 million signing on bonuses and 100 million salaries, and it's just obscene numbers. So I'd love to know what this guy's on.
We don't, but I can try and find out for you.
Yeah, slip into his DMs on LinkedIn or something like that.
Excuse me, pal. What are you getting paid?
Yeah, cool. Okay, cool. Thank you for that,
While
Mr.
I
Michael
do
Brown.
that.
Yeah, I'll crack on with reading out some choice headlines from the overnight news Roundup, compiled as always by the amazing Zach Eisman. Hello, Zach. I can see you listening in. Do follow Zach. Do subscribe to the Substack, etc., etc. But starting off in the trade space, obviously we kind of skirted on this already with Michael, but US-EU tariff deal proposed 10% baseline tariff on EU goods with exceptions for sensitive sectors like aircrafts and spirits. This could stabilise trade relations, but may still pressure EU exporters. Trump's stance on the rest of the world, as we know, he sent 14 letters out. We've got 25% on South Korea, 36% on Thailand, etc., but signals flexibility for countries proposing alternatives. This creates a tight negotiation window for global trade partners. That's assuming the can isn't kicked, but myself and Michael both agree it probably will be. China's response, China warns against US tariffs.
Sorry, actually, just on that, if anyone listening has a case for why we're wrong and why the can won't be kicked again, I'd be very keen to hear it,
Yeah.
because
Oh,
it's a
absolutely.
massively, I appreciate we're both on this boat, but it's a massively consensus view. And
Yeah.
when you get that sort of situation, it always makes me a little bit nervous. So if anyone has a decent explanation as to why the 1st of August might
Well,
actually be a hard deadline, then do let me know.
my current thinking is for countries that haven't bothered picking up the phone, August the 1st potentially is a hard deadline. But I believe if there's phone calls going on, if there's any conversations going on, that August the 1st becomes now a very much a grey area, and it's like, well, look, let's carry on talking. I mean, like the penguins that are stuck on that island, they're fucked because there's no phones there. So unfortunately, the penguins are going to get tariffed. But there you go. But where was it? China's response. China warns against US tariffs and threatens retaliation if excluded from supply chains, escalating trade tensions. Its agreement with Vietnam to boost trade signals, efforts to counter US moves, i.e. route through Vietnam. Global reactions. Japan calls US tariffs regrettable, but will negotiate. South Korea sees August 1st deadline as a grace period. Thailand and Indonesia are actively preparing to secure competitive tariff rates, indicating a rush to mitigate US trade barriers. US-India deal. Trump claims progress on a trade deal with India, potentially reshaping bilateral trade dynamics. Macro news. Obviously, we've just heard about the RBA rate decision, where they unexpectedly held rates at 3.85%. That obviously disappointed markets expecting a cut. S&P 500 outlook. Goldman Sachs raises the SPOO's forecast, citing expected US rate cuts and stronger large cap performance, signaling optimism for US equities despite global trade uncertainties. Global trade shifts. Japan's exports rose in June 2025 ahead of US tariffs. That's called front running for anyone wondering. While Germany's exports fell for a second month due to US trade barriers, highlighting tariff-driven disruptions. China's economy. President Xi emphasizes developing traditional industries while overproduction concerns persist, potentially impacting global prices as inflation data looms. Australian bonds. Japanese investors are pouring funds into Australian bonds, apparently, driven by lower hedging costs, reflecting shifting global investment flows amid US policy volatility. In geopolitical news, US-Ukraine arms. Trump confirms resumed US arms support for Ukraine, signaling continued Western backing against Russia. I did see someone, it might have been Hegseth or someone like that, saying that the pause was merely a standard pause where the Pentagon basically tracks where the stuff's been going in the first place. Whether or not that's been legit, I don't know. Israel-Palestine. Netanyahu rejects Palestinian statehood with sovereign security powers, prioritizing Israeli control, which could stall the peace efforts. So one to keep an eye on there. And in equities, before I hand back to you, Mr. Brown, as you've already said, Meta's AI push. Meta hires a top Apple AI researcher for its super intelligence division, intensifying competition in AI development. I tell you what, you must have a hell of a business card. Like, top man at super intelligence division. I might have to rewrite my business cards. I don't know. I don't know what will come up. I might have to get you some. There you go.
God.
ExxonMobil, they're lowering oil and gas prices. Sorry, they say lower oil and gas prices may cut Exxon's Q2 2025 earnings by $1.5 billion, reflecting energy sector challenges. In green energy, Trump's $3.4 trillion budget bill and proposed rules aim to curb solar and wind tax incentives, potentially slowing renewable energy growth. Corporate struggles. Before I hand back to you, Centene faces a potential junk rating downgrade after suspending its 2025 profit outlook. Samsung's Q2 profit is expected to halve due to US-China trade curbs and delayed AI chip sales. And what else we got? And finally, for me, Nissan's credit default swaps hit the 2009 peak amid a $4 billion bond sale, raising debt concerns. So definitely want to keep an eye on there. Nissan seemed to be permanently involved in merger talks, or his rumours have. It was Renault. I think we've seen Toyota recently. So yeah, there's one to keep an eye
Yeah.
on. But yeah, that's it from me. Back to you in the studio.
Yeah, it, Nissan and Renault is a shambles, and it has been ever since the former CEO had to escape Japan in a box.
Yeah, that was quite. Where did he go? Was it? I can't remember. Was it Lebanon or something like that? I can't.
Yeah, I think you might. I think he was Lebanese. I may be getting
Ah,
this completely wrong, but that must have been about 4 or 5 years ago
but
now.
that was literally smuggled out the bottom of the building in a box.
In a 3 foot long box.
in a cardboard box. Live in a box. Right, moving on quickly.
Yeah, well, I was messing around there because I haven't got much else to say, to be honest. It's a very,
Oh,
very
fair enough.
subdued docket ahead. I mean, we have nothing in terms of significant data releases, and frankly, if you get excited about either the NFIB Small Business Survey or the New York Fed Survey of Consumer Inflation Expectations, then I mean, even I'm going to tell you to get a life at that point. In terms of other things on the docket, the ECB's Nagel is due to speak this afternoon. Again, probably nothing interesting from him. And we do have Treasury Supply today as well, a 3-year note auction at 6 o'clock this evening, London time. That comes ahead of a 10-year sale tomorrow and a 30-year sale on Thursday. You would expect the latter two to potentially be a little bit more dicey than the 3-year sale, which should be taken down relatively well. And of course, any potential trade or geopolitical headlines will be eyed throughout the day as markets focus on the negotiating gambit, which is those tariff letters that were sent out yesterday. But that's pretty much it from me, to be
I'd
honest.
say one thing I will add on the geopolitical nature is the those Houthis are back at it in the targeting ships. There's currently at the moment apparently the UK MTO Maritime Trade Office or whatever it stands for say a vessel right now is under continuous attack. Apparently it's lost all propulsion and being attacked by
Nice.
after being attacked by 5 rocket grenades. And as we know, Trump has quite a big say on that, and last time they were kicking off he really did kind of kick the shit out of them. I think that's a military term for you. So interesting one to see, bearing in mind they have got assets in the area, whether or not we see renewed strikes against Yemeni ports
That's
by the US. Obviously Israel did strike them yesterday, which we mentioned, but yeah, obviously this is quite a good, well, quite a powerful trade route that they'll want to protect.
Yeah, that's a very good point because I believe it's either the second or the third ship that's been attacked in as many days,
Yeah,
and I also believe that the US still have a couple of aircraft carriers there as well as various other things. So, yeah,
I'd say
certainly
the
want to keep an
Houthis
eye
are
on.
being, yeah, I'd say the Houthis are being brave slash stupid at this rate, but yeah, we'll
Yeah,
see what
take your
happens there.
pick.
Exactly. Okay, well, Mr. Michael Brown, thank you for today. Listeners, thank you for tuning in as always. Big thanks to Zach for the overnight news roundup as always. I can see Cam listening. There's no crypto blast today. That'll be tomorrow. But yeah, whatever you're doing today, keep it tight, stay safe, and we'll catch you tomorrow. Much love.
Bye for now.